Hello and welcome to one of our popular investors. Today I'll be interviewing the lovely Onegirl, Lena. Some of you may have known her already. Some of you may be following her already, but I want to introduce Lena. So Lena, the first time I met you was an interview in one of the stock events that we were doing about 6 months ago, was it? About January, February. And my first memory of Lena is that she came over to me, she goes, "Oh, you're running courses for eToro." And then she goes, "My results are better than yours." So it just gives me the kind of insight into her humor. But Lena, tell our students a little bit about yourself.
Okay, so I am a stock investor, long-term stock investor, and I started investing in the stock market around 2013 after the sale of my husband's company. And so we had some money and we had to decide what to do with it. So we decided to go into the stock market because we already had some buy-to-lets. And we decided to do it ourselves. We weren't going to use a fund manager because we'd used them before and we didn't think they were very good. And we thought we could probably do better than a fund, an index fund. Because index fund chooses good and not so good stocks. So we thought, why don't we just pick the good ones? And so initially we went into the UK market and we bought big established UK companies that were giving a good dividend. And we did that for a while. And my husband went back to work and I was sitting there watching these stocks. And, it was all okay, but I started to hear then about, a group of companies in America that were called growth technology stocks. And the returns could be really life-changing. They had a really good product. And, and they were run by really smart people. And best of all, I knew those companies because I was using them like Netflix, Facebook, Amazon, Google. So, my husband agreed with me. And so we sold up. And we went into the US market. But before we did that, we did our research and we educated ourselves. And so every stock we researched it properly. And then we understood they could be very volatile. And we said, we're okay with that. And we also knew that to get the best profits, you had to hold them for a long time, many years. Like if you bought Amazon in 2000 or Apple and you held them, up until now, you've done really, really well and you hadn't traded them in and out. And so we said, we'll do that too. And we also knew you couldn't time the market. And so, which was a good thing because 3 weeks later, we saw a huge tech sell-off. And you know how that can be. And so we just looked at each other and said, hey, that's okay. We've researched those companies. We believe in them. And we knew this could happen. And hey, we don't need this money for 20 years. So, let's just turn off this computer. So, we turned off, we went about with our lives. For 6 months later, we hopped back on and we couldn't believe what we saw. We couldn't believe the profits we were seeing. And we thought, well, that's it, I got my bug and I love investing ever since then.
So you just said there that you had, when you started off, you invested in stocks that actually give you a dividend. So what is the difference between dividend trading and trading for stock growth? Because that was something that you have just mentioned there. Because when you started off, you started off trading dividends, and then you sort of went into trading for growth. So what is the pros and cons of both of those, if you can?
So when we went into the US, we understood that we were going to make our money on capital appreciation. So as the share price went up, and these companies were doing well, we would sell them, and that's how we would get our profit. And we thought that was way more worth it because we get way more than we get with a dividend-paying company.
Okay, well that makes sense because a dividend is a small portion of the profits that a company makes, and that's just shared out between everyone. So. Growth will always sort of beat dividends. So you decided to become a popular investor. Why did you decide to become a popular investor?
Okay, so I came on to eToro actually as a copier because when I saw eToro on a BBC program, and I thought social trading looked a lot of fun. So I came and I tried because I didn't have any stocks then. So I came and I tried copying, I tried currency, I tried shorting, I tried, what else? I tried Bitcoin. And, none of those things really worked out for me. But then, I saw that, eToro started to introduce fractional shares. And I saw that, there were great advantage for what I wanted to do next, which was to start a regular sort of investment fund for myself. So, so I started doing that. And then I started getting copiers. And, that felt great, to see others are doing well, while I am doing well. And, they're sharing this journey with me. That feels great.
So there's a lot of people who trust you with their money. Do you have anything to say to them to keep their trust or to put their mind at ease? Because we had a massive sell-off on the likes of the stock market there over March. So obviously you had to sort of put some of your followers at ease. What did you say to them?
My copy, yeah. All right. So I think the first thing to get someone's trust is you've got to earn it, right? And all my long-term copiers will vouch for me that I keep my word and and I've always said from day one, in a stock market crash, I'm going shopping, and that's what I did. I went shopping. It was really great.
All right. So that's the idea. So once you see a market crash, you generally just pile in and double up on your trades.
Yeah. Exactly. Be greedy when others are fearful. You don't get often these opportunities. I mean, a crash like this just happens, really literally a few times a century. I had a look. More than 30% doesn't happen that often, so you've got to go shopping. What? I did a lot. I did a lot for my copiers. I communicated a lot in the feed. I even started doing videos, because I really wanted them, to benefit with me on this big crash.
Perfect. So, what's your trading strategy? It sounds a little bit like it's dollar cost average or something like that, is it? Or where do you do your research as well for it?
Okay, so my strategy basically is to buy and hold for many years. Yeah, I want to invest in businesses through their cycle, from all the way, till they're really big. So, so that's the idea, is buy and hold and keep reinvesting every month, keep buying more, looking for opportunities in the market, of where is the best place to put my money every month. And of course, to take big advantages of sell-offs.
Okay, so a really good example of that in your portfolio is Shopify. Now, why I said your strategy looks very, very similar to dollar cost average is because I was having a look at it. You bought it and then bought it and bought it and bought it. And I was looking at some of the positions there you got in 2018 are 500% up. Now, are you thinking that this is a point where to jump out of the trades? Are you still looking at holds? And I also noticed that you haven't bought any more positions since the end of 2019. Is there any more on the horizon or what's your thoughts on the likes of Shopify that you already are quite heavily invested in?
I did buy more Shopify. I didn't sell off, and I did really well. I've got a really big return on that. I did. I just checked. I've been going through all my trades.
So you actually bought some in the crash then as well. Brilliant.
Yeah. Yeah. And
what's the long-term projection for the likes of that?
With Shopify, basically my strategy is I like to add to my winners. If a stock is doing well, I don't think I'm going to sell it because it's done really well. I'm going to keep investing because I keep thinking it's going to do even better. That is my method, adding to your winners. And I do take I do take profits, but my profits, you've got to try to understand, my strategy is more like I'm trying to think like an investment fund. I want to grow it in value, and I give out a payment to my copiers and myself every year about 3 to 4%. So I will nibble off from some of the the higher positions and give that back as a payment. But the idea is to keep growing the account through the years, and then every year that 3 or 4% will grow in value. So we grow our account and we grow what we take home over the years.
Oh wow! So that's quite different to what any of you and any of the other investors. So what you do is hold on to a long-term position, and then you would close maybe 3 or 4%, which is very
Yes.
similar to a dividend. You could say that's a dividend to your investors who are actually with you on this long-term journey.
Yes. Yes. But we're going to make way more than buying a value share.
Yeah, so you also get the upside of holding onto the long term, but what you do is take some profit every so often to give back to so many investors. But if they want to pull their money out and close all the positions, that means then they've made quite a pretty return on that. Now, as we saw in March with the likes of coronavirus, with the stock market, it was massively overextended. The market got very volatile. Now, did you change your strategy, or how did you adapt to that marketplace?
Right. Okay. I always work within the framework of my strategy. So I'm very methodical. I'm very sort of mechanical, very disciplined. I never, go away from my strategy. So that guides me, especially when the market is in chaos and everything is like panic and no one knows where they are. And having that strategy guides me. So one of my rules is to always let a crash burn itself out a bit, So I let it just run, and then I went in and I bought and I bought and I bought. I bought in stages. I went first in, I bought as much as I could, and then I spread it out over a few days, and then I went back in with more money, and I bought myself all the way up to the end of the dip, till the end of the crash.
Oh, brilliant! So. Do you think there are any companies or sectors that are in this current situation that might come out with a positive impact?
Yeah, I mean, yeah. I think technology companies. Technology companies, I think, have already done well, and I think they will continue to do very well because we're all working from home, we're learning from home, we're shopping, we're getting our entertainment from home. And I think, this coronavirus has, shown a lot of people, has sort of forced them to use these new technologies. And I think now they see the great advantages they bring. I think they'll continue to use them. Look, I've heard that there were companies now, they see how great it is. They're going to continue. I heard Twitter saying to people like, you can work from home forever if you want. So, I think technology will continue to do really well going into the future.
Good, because I'm quite heavily in tech at the minute, so that's always good. It's nice to get another positive insight from other traders as well. Now, are there any stocks that you have your eye on the moment? And also, and we're going to have a double-edged question there, is do you buy a CFD or do you buy the underlying asset when you're doing this? Because some of my trades are really, I'm starting with the last one. Okay, some of my trades are really old, so that's why they're CFDs. The new ones are all the underlying assets, because eToro used to do CFDs, but now they are the underlying asset of the share. And any stocks that you're looking at the moment?
Yes. Right now, I've just been thinking about DocuSign. Have you heard of it? You must have.
Yeah, I've heard that, yeah. Once you go to sign, if you want to sign a document online, then you just send it over to someone and it's done.
Exactly. It seems like a, no-brainer, right? What a great idea. And they had a really good earning.
Well, if everyone has worked from home now, you'd imagine the likes of DocuSign and companies like that would potentially take off because they'll have more subscriptions.
Yeah, I've heard lawyers are really using a lot of them right now. Yeah.
Well, it's something we also use ourselves. So that's thinking around the office space, isn't it?
Yes.
So any messages, not advice to any messages now, not advice to the people watching who are interested in copying you?
Yeah, to do well in the stock market, right, you need to be positive about the stock market. And, I just say to myself, you've got the odds on your side, you've got history on your side, you've got human ingenuity on your side. And the human will to survive. I mean, I would never want to bet against those.
What do you mean that you have the markets on your side? Because The markets are again everyone, aren't they? That's what I've heard before.
What's that?
That the markets are always against you.
I don't know why people think that. I always feel they're on my side. You know, when they're going up, they're on my side. When they're going down, an opportunity.
So when they're going down, that's another opportunity to scale into your position.
Exactly.
And is there a maximum or a minimum investment threshold, and how you decide on how much you invest when buying a new stock?
Okay, yeah, I always start small and I build out. So basically, I always start small and then I build out as I see how the company is performing by following the earnings, you know, seeing they're executing well, they're growing their market share. So yeah, I never start big. I always start tiny and build out, and then build them through the levels of.
Okay, so you said you look at earnings. So where do you actually get your information about earnings?
Oh yes, yeah. So earnings was internet. I mean, you can listen to conference calls. I mean, there's so much write-up, you know, when these earnings come out. So yeah, the internet, absolutely. You know.
So as they just go on to Google.
Yeah.
So just going on to Google and typing in earnings for DocuSign, so for instance, and just put it up through there.
Yeah, no, but not just like that. I'd also like go to company website. I do like actually look at YouTube. The companies put up a lot of YouTubes, which is a really great way to see, you know, the products in a really nice, clear way. And and also I also subscribe to Motley Fool, and they do really nice write-ups. And I also use Investopedia. Is it Investopedia? Investing.com? Yeah, investing.com, because you can put your portfolio and all your watch lists there, and then anything that's happening in the news, that'll come up.
Okay,
so you get like you see loads of write-ups.
Oh, that's a new one. I've never heard of that before. So that'll be they'll have a few customers popping their portfolios in there. Okay, that's very good. So what area? So other than DocuSign, what areas of the market are you looking at for the remainder of 2020?
I really like SaaS companies, software as a service. They're kind of the business models I'm a big fan of. You know, they're high margin, very sticky, you know, expensive sort of leaving costs if you want to leave them. And yeah, they scale really well, you know. So I've been investing in a lot more of those, like Okta and Fastly, that kind of stuff recently. And I hope to build them out, and they've been doing really well. It's a lot of money going to them right now. So yeah, expect a lot of volatility.
So there's a question there for one of our customers there. Do you take profit or reduce liability during a market crash?
No.
Why?
No, I never sell during a market crash. That's the worst time to sell. You know, absolute worst time.
Most retail traders, I was actually reading it there in Fidelity that most of Fidelity's clients over the age of 60 have closed all their positions in February to March because of the market crash. Now, would it not make sense for you to do the likes of that and then reinvest?
Sorry, can you hear me?
Yeah, okay. Did you hear the question?
What did you say?
I said I was reading something there about Fidelity, and most of their investors who are over 65 have actually closed their markets or closed their investments in the markets. And what they've done is they've waited and potentially staying out of the market now. Is that something that you would do also, or do you keep reinvesting? Because when the market's crashing, would it not make more sense to take profit and then jump in at a lower rate, or does it make more sense to hold on to this through that whole drop?
Okay, you can't sell. You have to hold, right? Because you never know when it's going to turn around and go back up. So it's very, very risky to sell. And, it makes me really sad to hear that all those people sold their shares because they haven't, they've lost money because this big run, they've missed out on it. I mean, I was just reading actually an article just very recently that 88%, right, of the stocks, individual stocks, are held by no, what's the wrong way around? No, by very few percentage of Americans. And so the divide between the rich and poor has grown even more because, they've been holding on to their stocks and they've had all the returns. And that just makes me sad to hear that because, we could all be having these returns. We just have to know how to do it.
So what advice would you say to new traders who are looking to trade long term, but they've never sat through a crash like this? Now, we keep saying the word crash. Now, to me, because I'm a technical trader, that is a phase 2. And that to me, that's all that was. And when we got near the bottom of that phase 2, it was to buy back up. So what would you say to the new traders that are looking to follow you now? Because we are talking about a second wave of the pandemic. So what happens if wave 2 or crash number 2 happens and your new investors have jumped in today? What advice would you give to those guys?
The advice I'd say to them, have some money on the side because we're going shopping. That's what we're going to do. That's what I always do. No, that's my strategy. Have you seen myself?
Say that again, Lena?
Have you seen my returns recently? Have you seen my stats?
Yeah, yes, I have. So you're 37% off this year. So you're flying it at the minute. You are beating myself, who's a technical trader, who's only up 14 at the minute. So it's nice to see. It's nice to see. Now, when you are in the markets and see things dropping due to the overall market news, do you hedge your buys?
No, I don't hedge. No, actually, in a way, my cash is my hedge. So I would say everyone have a little bit of cash in a savings account somewhere, just ready for taking, advantage of the market. Also it stops you selling your shares for a rubbish price because, you don't need to come out of the stock market because you need money. So, yeah, so that's kind of my hedge, and I don't do anything else. That's it.
So that actually ties on the next question. The next question is, are you concerned your portfolio appears to be unhedged? So it's sort of a twofold there, that question.
Yeah, and I just want to say one more thing. When you're hedging, where are you going? How are you going to make money? You're buying umbrellas, you're selling ice cream, and then, where are you going to make the money?
Buying umbrellas and selling ice cream. That is definitely a new one. So how are you dividing your days between trading, research, and analysis? Do you only do US nowadays, or do you monitor also the non-US equities?
Yeah, I just focus on the US market, and I just focus on the stocks. The market is just an opportunity for me to get my stocks at a better price or to sell them at a good price. That's how I see the market. So yeah, I don't really get involved with going in the market. It's all about the stocks. So
why? So that's a good topic. So you were invested in the likes of UK, which is the likes of the FTSE, and now you've sort of moved into sort of US stocks. So for new people that have no idea why you would jump into the US market over the UK, what was the reasoning behind it?
Okay, the reason was quite simple. I actually knew more about the US stocks than I did about the UK stocks. I mean, what did I know about supermarkets? Because we bought Sainsbury's, we bought BP, Centrica. I mean, I knew nothing about these companies. Construction, supermarkets, how boring, right?
Well, you say that unless you own a supermarket or you own a construction company. And so what do you mean? That there's more household names in the US stock market? Is that what you mean?
Yeah. There were companies that I was actually using. And then also I started to find, the innovation and the business models really interesting. And yeah, I just kind of got hooked. And I also love the fact that people running them so clever, and there's always something new happening. They're making products that you would never dream of, or the business evolves in a way you'd never dream of, like how Amazon has started from a online bookshop and it went on to what it's become today. e-commerce.
One of the most
AWS.
profitable companies through coronavirus.
Yeah.
And do you recommend now to new customer or new copiers, or just to copy your portfolio? So with new copiers coming in, would you expect them now to copy your whole portfolio, or would you expect them just to copy the new open trades that you're taking?
Okay, so you have to copy the whole portfolio. I mean, look, when we went into the market, right, we put all our money into the market, and that's why we got the good profits we did. So you have to do the same, right? But you just have to have, a longer term horizon. Give the market time, 3 to 5 years. That way you can survive the crashes when they come. Because if you make it too short, you just don't know when this crash is going to come, and then you could end up just losing your money. So if you allow enough time, you should be okay. And yeah, and no point trying to copy open trades, because I only open trades monthly, and only a very few, and that is with new money.
Okay, so talking about copying yourself, what advice would you say to anyone who has decided to copy? Because no doubt after today, people will come across and go, actually, yeah, I've been looking at her for a little while. She comes across as someone who knows what she's doing, stuff like that. So what would you say to any new customers that are coming in on you now at the minute?
Yeah, absolutely. Yeah, if you come, I would say first thing is go read my blog. I explain my strategy completely. I share everything I learned on the markets there, and it's all for free. And you can also find me on Instagram, and you can find me on YouTube as well now. And obviously on the feed, ask me any question.
So are all those links actually on your bio for everything like that? Because if it's not, let everyone know where they can actually find you with all this stuff.
Yeah, it's all in the bio. It's all in the bio.
Okay, so your Instagram name, what's your Instagram name there?
It's Onegirl Investing. Yeah, Onegirl Investing.
So Onegirl Investing is, and the blog, what's the name of the blog? Because not everyone will be able to find your bio. Some people won't be able to. So we'll have people here, or also that are too lazy to go to your bio. So yeah, let them know where we can actually find all this information.
Yeah. So yeah, the website is onegirlinvesting/Weebly, I think .com.
Okay. And how often do you update the blog? Is that something that is once a year, once a month, or is when anything relevant that you pop up there?
Yeah, like I say, it's like when something's happening in the market, and I think, I want to just explain that a little bit more to them, and I want it in a place where they can easily find it, and it's just always there. Because stuff on the feed, it rolls down, and then they can't see it. So when it sits on the blog, they can just go and find that article there. And also the lessons in there too. The lessons I've learned, which they can use too.
So what's the biggest lesson that you've learned from trading?
The biggest lesson?
Yes.
I didn't really make a lot of mistakes.
That made me chuckle.
You know what? I think the biggest thing, it's okay. I sold Tesla once, and I bought it again. So, it's okay to make a mistake, and it's okay to change. You can just change your mind. It's okay.
So you would recommend to people is to don't panic, even if you do make a mistake. It's not the end of the world. That you can actually go from there.
Yes.
Perfect. Well, look, Lena, it's been a pleasure as always. I do love interviewing you because it does be funny. So thank you very much. Anyone who wants to, I run trading courses with eToro. We do online courses. I do webinars every Tuesday, which is the Market Watch webinar. Anyone who wants to go to that, go to the eToro Trading School. Or you can click on the picture there of the classrooms. The next one that I'll be running is on the Monday the 22nd, and each one of those are live. So between 2:30 till 4 for the next 3 days. It's in 3 parts. So look, it's been an absolute pleasure. Thank you very much, and have a lovely evening, everyone.